Thank you very much, John. May we invite Eduardo V to share your comments? Thank you. Good morning. I totally agree with everything John presented. I guess my quick reactions or comments from being one of the practitioners also. Aside from policy consistency, I guess I have two more wish lists or recommendations. One is, I guess, the institutional level, especially with elections coming way next year. We just want to ensure and hope that the PPP center will be strengthened, will be continued, that the next president will ensure that that the PPP continues. That way, all of this, so that it will take one step forward and two steps backward. That one. Number two is regarding also the consistency. In addition to the policy issues and my other candidates will address that, I'm sure, is if there could be ways that the right way and the court process could be fixed. Right away, I guess it's a problem we have with some of our friends here who are actually one or actually involved. I mean, there's so much already risk being given to the private sector, and then the government just has to deliver the right of way, and then there's some delays in the right of way. They can't even deliver that. Of course, it's not the fault of government. Sometimes the problem is the courts are too. I guess there's too much democracy here, and you have to take possession even if you're entitled. That's the second point. The third point is, again, as a wish list also, because on one hand, when you look at the risk sharing, we want to get the best for the government, but in fairness, the private sector investors are really led by the local conglomerates. I don't think they should be penalized and said that they're expanding too much and there's concentration risk because they're actually stepping up. So why should you penalize them? Or why should you say that there's concentration risk? So I think, in fact, if we can come up with more solutions, whether the credit enhancements, or if the SBL issues can be addressed or be extended or be it can be justified because this will eventually be strong cash flows anyway. So why pigeonhole, my friends here in table 10, who are most of the winners or bidders, from saying that they're going to take concentration risk when these are cash flow led. So why is it taken against them? They're the ones willing to take revenue risk and traffic risk. Other countries don't do that. And then you're going to say that we're having concentration risk. So there's something wrong here. Instead of being penalized, they should be given awards, right? So I guess from the financing perspective, we're there to finance, most of us here, but really it's also the CP. So again, right away, what process, we're trying to be more understanding of all these concerns. If they can be if the sponsors can be given more limits or more headway, then it will make things easier and will allow us to finance more transactions.
Thank you very much, Eduardo. Donna, please.
Thank you. Good morning. Just a few comments, John, regarding your presentation. But before that, I'd like to mention to add that the International Finance Corporation, we are looking at trying to help out alleviate the SBL issue. So that's one of my projects. Anyway, the IFC, one part of the IFC, we advise the PPP Center as well as the other implementing agencies for these projects. And I understand that through the years there have been a lot of improvements in terms of the bid process, and especially towards getting dialogues with the stakeholders going early on, including potential private sector sponsors, to ensure that these projects work and that they are bankable. So, albeit slowly, I think there have been improvements. And secondly, your point as well, I also want to reiterate on the opening up of concession agreements, for instance, post-award. That is really a risk that investors see, in terms of coming into the market. We all know about the issue regarding water concession. That issue has been talked about for the last couple of months, and I think more so now with the ESO concession results. So it's very, very, for large transactions or projects, it's really quite difficult, for administrations to open up these concession agreements when they have already been awarded and the sponsors have put in, and lenders have put in certain amounts of money on the basis of certain financial forecasts based on the agreed agreements. Anyway, my last point would be on the gold standard that you're proposing. Right now, it seems to be very challenging to do that because I think in terms of, I would speak from the point of view of us as a financial investor, investors have very different risk appetites. I would say like Ed would have a very different risk appetite probably from other banks. So it's very difficult, I guess, to go and say, okay, if you pass all these, if these standards are there, then we can easily finance. There are also, let's say, sectoral limits for certain financial institutions. What we would apply or set as standards as a multilateral institution are what we call environmental and social standards. A lot of our clients are very familiar with this. We tend to, I would say, apply them in our projects, and this has to do a lot with standards on the environment, informal settlers, etc. So that certainly for a multilateral institution, we would have standards for that. And then, well, lastly, as IFC, we are very much open to looking at investing in the PPP projects once they've been awarded. We do investments in the whole range from debt and equity. So we're very, very bullish about the Philippine market, and we do hope to be able to support in a big way the government's ambitious targets with regards to infrastructure projects.
Thank you very much, Donna. Maybe hear from Henry.
Hi, good morning. So my name is Henry Hiramoto from Japan Bank of International Cooperation, JBIC. And I think many people confuse this with JICA. So in fact, we are the largest provider of project finance. So we support private sector projects. So basically our role is to support the Japanese companies export and also investment abroad. And in case of the Philippines, so we have a rep office here, and we cover various sectors, power, and other PPP infrastructure projects like rail. And we're also interested in airport and etc. And we also support Japanese manufacturing companies coming to the Philippines. And so regarding the PPP projects, unfortunately, I think you all know that so far none of the Japanese companies has participated in the Philippines market yet. And so we would like to convince them to come into this, a big opportunity to come into the Philippines market. I think there are various issues that might be deterring Japanese companies from coming to the Philippines market. And we had the opportunity to look into some of the concession agreements which have been just signed in the rail sector, network sector, and we have identified some key issues, like for example, patronage risk, the market risk. I think there are differences in risk appetite. So I'm pretty sure local conglomerates and local banks are quite bullish in this respect. But in our case, I think the first project which we had assumed the ridership or patronage risk was in Sao Paulo, Ring Road project. And I was in charge of that. In that project, in comparison to the base case, the demand was only 40%. was a disaster, to be honest. And it was lucky for us that it was repaid, like after a year or so. And so, and that project was in fact brownfield. It had a track record of 10 years. So it's, yes, of course. Anyway, yes, it's really difficult to project piece of demand. So we would expect some level of government support, at least there's a charge risk. And I think there are many ways that we can deliberate the government support. So we're not asking for the full guarantee. I'm sure the Philippine government wouldn't agree on that, but we would like to continue our dialogue with the government to listen, to provide us with some partial guarantee. It could be the cap and collar. And I think that would be a great game changer, at least for the Japanese companies. And there are a track record of some Japanese companies assuming ridership risk with the cap and collar scheme. There are, in fact, some Japanese companies who mentioned that the combination of 3P, the determined risk, PPP, and the Philippines would just deter them from even purchasing the product. And that's really sad because if we, when we look into the concession agreement for these PPP projects in the Philippines, it's really sophisticated, but it's very refined. You can compare it with other countries like Indonesia and Vietnam. So we're very convinced that there are opportunities for the Japanese companies to participate. So again, there are several other key issues that we have identified, and some are so-called boilerplate laws, like in the case of force majeure termination, and the procedure necessary for the government compensation. There were some excessive grace period. So we're a bit concerned about that. So if we can come up with a mutually agreeable terms and conditions, at least for these boilerplate laws, I think it would be very beneficial for both of us. It would bring down the time and cost that we need for the negotiation of these projects in the future. If there are Japanese companies that show interest. And anyway, so we would like to continue our dialogue between the Philippine government. And I think we are now in the stage of trial and error. And I'd like to tell my Japanese colleagues, I'm not seeing very much of them, but now is the time to come into the Philippines because there are great opportunity, and so that's about it. Thank you.
Thank you very much, Henry. Can we hear from Hideki, please?
Thank you. I'd like to make 3 points on how to attract national commercial bank interest to lend to PPP projects. And I make the same points whenever I speak in similar forums in Indonesia, Vietnam, Malaysia, and Cambodia. And I'll end by giving some insights on how local banks and international banks don't necessarily see risk the same way. Okay. Now, there are many important requirements in order to attract international commercial banks. But I think there are 3 of them that really stand out. First of all, it's really crucial. I think it's obvious, but it's worth repeating that there should be proper risk allocation between the public and private sectors. Sometimes there's a tendency to put too much risk on the part of the private sector. And in particular, demand risk in greenfield transportation projects. As my esteemed colleague here, Henry mentioned, there's tendency in greenfield transportation projects to undershoot their forecasts in a really, really bad way. And my colleagues here from the international commercial banks can cite examples in developed countries, developing countries all over the world. So that's number one. Number two is transparency in the bid process. The bidding process has to be as transparent as possible, and the criteria for awarding has to be as objective as possible to avoid any challenge at any point in the project life cycle. We're not talking about just challenge immediately after the bidding is given. The challenge could come up at any point in time in, let's say, a 25-year BOT. From the commercial bank's point of view, the last thing we want is to achieve financial closing, and a few years down the line, there's a court case questioning the validity of the award. The third point is legal and regulatory predictability. International lenders, international investors don't want to see adverse changes in the law, in the regulation, or in how the laws and regulations are interpreted, particularly when there's a change in administration. Now, from international banks' point of view, we seek ways to mitigate this risk. In the concession agreement, how the termination payments are structured, how force majeure is defined. And we also, in some cases, look to our friendly DCAs, particularly my favorite DCA over here, to help us mitigate that risk. My favorite multinational PPP to help us mitigate this risk. And lastly, local banks and international banks don't necessarily see things the same way. It's not only here in the Philippines, but also in Indonesia, Thailand, and other Asian countries. I guess by virtue of being local banks tend to be able to take usage risk, demand risk, in a significantly larger measure than international banks. I guess here in the Philippines we see that in transportation projects that are ongoing in terms of financing. But by and large, international banks would like to see availability-based revenue structures for transport projects, particularly for railway projects. And this applies to all countries in the region. I guess you're wondering, what do international banks bring to the table? I think our biggest advantage is that we're able to offer really very long tenors, in US dollars in particular. And we're able to do so at relatively competitive pricing compared, say, to local banks, not only here, but with countries around the region. It's not really either or situation that you go for either international banks or Philippine banks. There are many situations, particularly in the power sector, where you see both sets of banks working together. There'll be some challenges on interconnector issues and stuff like that, but it's been done, particularly in the power sector. It's more challenging to do so in the transportation sector, but not impossible. As for project bonds coming to the picture, yes, they can also be part of all that overall financing. There will be challenges, but it can be done. So my own view is that there are certain aspects structurally that can improve to make PPP projects more attractive to international investors, particularly to Japanese companies, as Henry mentioned. We are a Japanese bank, not from a Japanese bank, but we support more, we can't be supporting just the Japanese corporates. We also support international corporates as well as the local corporations here. And, companies don't see things the same way, but there are common threats, common concerns that I've enumerated at the start of my discussion. Thank you.
Thank you very much, Ricky. We don't have time for questions, but maybe John would like to give a response to the comments.
Sure. Well, it's just a couple of observations that occurred to me during that discussion. One is around this point of demand risk for transportation projects. Now, of course, as most people in this room know, the great success of the explosion of new high-quality infrastructure in Korea came about as a result of a revenue guarantee scheme on the part of the government, where over a very brief period of around 4 years, these revenue guarantees were offered to make up for some compromise, I guess, between the government's revenue traffic forecasting and the private business traffic forecasting. This was hugely successful because it created a very competitive industry. Basically, people bidding for projects were bidding for government bonds, if you like, because they had the downside protection. So this has been very successful in one market, and I'm not recommending that for the Philippines, but just sort of making that observation as a general observation about emerging markets. But I think for some markets you could tie that idea together with the idea of governments recycling equity. So many governments, even in very early stage emerging markets, own a lot of infrastructure assets. And they have an ability to sell down or partially sell down those assets. Now this is happening in Australia in a very significant way at the moment, where governments are selling ports, selling power stations, and taking that capital and putting it into special infrastructure funds to support projects that have got demand risk or projects that are not really suitable for PPPs. So I think, one thing for policymakers to think about is, rather than earmarking the benefits of partial privatisations or partial sell downs to go into consolidated general revenue, put those proceeds into special funds that are designed to provide downside protection, for example, for transportation projects. So that's one of the thoughts that occurred to me in this discussion. The other thought, and I hate to say this, but after many years of being involved in infrastructure, both as a government official and as a banker, there is no mitigation for the risk of changes in administration. My view is we just have to face that. So for example, in Korea, we have around $9 billion worth of infrastructure assets through our various listed and unlisted funds. For at least half a year, we're in the courts arguing about enforceability of concession agreements. But we've been in the same situation in Canada, we've been in the same situation in Europe. I think it's just the reality that no matter how good a contract is, the world is about people. People change, administrations change, governments change. So I think we can do the best we can to legally make post-completion, make concession contracts enforceable. But at the end of the day, it's all about both sides being sensible and understanding the reality of the world that we're in and doing our best to negotiate our way through those changes. So thank you very much to the panel. I think a fairly consistent sort of theme coming through, and thank you very much to the audience. Thank you.
John has talked about flexibility in the bid rules, and I think we can be flexible for if there are questions, maybe 1 or 2 questions, if there are any, we can be flexible. None? Okay. Oh, just one question.
I don't have a microphone, but my name's Scott Nielsen. I'm from Allen & Overy. I'm just wondering, a lot of the returns in the Philippines are peso-based, and so how are the foreign banks and how are the foreign banks and multilaterals and ECAs thinking about that currency risk and dealing with that? Assuming that there is a need for foreign capital to come in.
For IFC, we actually can't fund long-term peso, so that's not an issue with us. Ross.
With the exception of a few international banks in the Philippines, international banks do have this problem with peso funding over a certain tenor. So this is an issue for international banks, other than 2 or 3 big ones here in the Philippines. And to the extent that international banks are wanted or needed in projects, the way this could be mitigated is through some foreign exchange pass-through mechanism, which is very unpopular, I know, particularly for transportation projects. But speaking more broadly, regionally, there are markets that have cross-currency swaps between the local and US dollars that are quite liquid. Perhaps that's one aspect that the multilaterals can help develop in the Philippines. Okay. It's a long-term project to do so, but that's one way of doing it. Yeah, basically.
Any more questions? We are eating into our, yes.
John Holmes from Marsh Hong Kong. A question for John and the panel. You talked about the gold standard. Are you referring on a per country basis or by project type?
Actually, I'm referring to a standard that applies across countries and across subsectors, and you know, acknowledging what's being said. But you know, my suggestion is for the private sector to look at the types of subsectors of infrastructure there may be, to look at the characteristics of risk across emerging markets, and they're quite similar across markets, whether it's South America, Asia, parts of Eastern Europe. And you know, this gold standard will specify very clearly what governments will need to do to qualify for that capital. I think I'm still developing the idea, to be perfectly honest, but one thought is that the gold standard could then look at project by project. So you look at a market and say, you know, high-speed rail, for example, there's particular characteristics. You look at a high-speed rail project in Peru and design the application of the standard to that project. The broad point that I'm making is that we've never really sat down and said in our dreams what would allow us to put the capital into that project. Now, I think that's really needed. It's a more proactive approach than just saying, well, you need to get the bid rules right. You know, all of that needs to happen. But I think there's an obligation on part of private investors and banks to specify exactly what they would like to see happen, and then that can be applied at a project level. I have made this suggestion through the G20 Secretariat, by the way, but I'm still waiting to hear back.
So we're eating into our coffee break, but if you don't mind, we can entertain one more question. Yes, please. Thank you.
Mine is a kind of follow-up from that last question. I understand what you're trying to do, gold standard. So what would be the payoff? One, you expect that there will be a lower cost of capital overall applied to the project. That is, if you meet a 99% rating on the gold standard, that there's a payoff with a lower cost of capital. And secondly, the support, you kind of mentioned it with the G20, what would be the support mechanism for that? Because you need a secretariat, you need some sort of organisation that could then independently judge it. And do you also envisage having an arbitration panel as part of that? Because I've met the gold standard, then it should be easier for arbitration, maybe a global arbitration panel.
I certainly don't envisage all that bureaucracy that goes with it. I don't envisage arbitration panels. This is a take it or leave it. This is not something that's mandated by or contained in a particular government's recommendations. But basically the idea is this is a chance to access all of that capital that you saw on one of my slides, which is sitting there looking for something to do, and saying to that capital, right, you're sitting there, you're not happy. What standards would you like to see met for your money to go through? In terms of the Secretariat, so what the G20 agreed is to allocate $20 million a year for an organisation known as the Global Infrastructure Hub, which will be headquartered in Sydney, Australia. And it will have the part, that $20 million will finance it taking on projects which seek to better coordinate between the various interests in the infrastructure industry. And that there's been talk of looking for a global set of PPP rules or regional sets of PPP rules. I suspect that's not the solution because there are country variations. So the Secretariat is there, the Capital is there, there's a board made up of some of the most active G20 members, and I think we need to give it a task. We need to give it something to do, and I had thought that this idea might be one of the ideas that they could pursue.
Thank you very much, John, Donna, Henry, Eduardo, and Ricky, for your great presentation and good comments. Thank you very much.